edition of Hawaii Real Estate News Now. This is episode 2, May 2018. Before we get started, we got the legal notice and disclaimer here. Of course, we're not attorneys here, so you hear any legal advice, you consult your own professional for any legal matters, serious stuff. So I'll introduce you, Dean. Do you say hi?
Hey, Lane, how's it going?
Yeah, so get your email here if people want to get a hold of you. And I stole this quote that you said last time: with the high prices in Hawaii, you see buyers tend to buy at the top of what they're qualified for, and you're really trying to get them the best value, biggest bang for their buck. So I appreciate you doing that.
Thank you, Lane. And I appreciate you.
I appreciate you. So tell us about your topic of the month, this lender selection story you got.
Yeah. I wanted to share a little story, a little example of a recent transaction that I went into, just to show, I guess, on the buyer side, especially the importance of choosing a good lender. And first and foremost, I want to talk about like the difference for buyers if they realize that there's a difference between getting a lender, a financial institution versus a mortgage broker, right? So of course, if you go to a loan officer for a financial institution, they're gonna you're gonna provide them with your information, and they'll be offering products at rates just, of course, at that one bank or credit union or whatever they may be, versus if you're going with a mortgage broker, they're going to do the initial underwriting and then go out and find a good lender for you that fits what you're looking for in terms of the deal that you have at hand. And so, I mean, there's always a question, well, what if you're going with a mortgage broker, are there additional fees that you may pay? And that's be a question for another question, because my understanding the yes and no, because there are, of course, fees. You have another party, but it could be borne by either the buyer or even the financial institution that's taking the loan on. But anyway, for my example, my recent transaction, I had a buyer who wanted to select her own lender, which is fine. I'm totally fine with that. Ideally, I'd like to refer someone that I know is tried and true, that's gonna be able to close the deal timely. But in this scenario, my client had selected a loan officer to work with. So I'd spoken with the loan officer, and we went through the situation and got the pre-approval letter for to submit the purchase contract or my offer to the seller's agent. So it worked out well, and there a little bit of negotiation, but at the end of the day, we had a accepted offer. And the next day, I got a voicemail at 6:40 in the morning. Not even like she just left a voicemail. The loan officer didn't even talk to me in person, but the loan officer stated that she had just gotten information that they will no longer be able to. They won't be able to close on our deal. They won't be able to underwrite it, and this is day one in our accepted contract. And
so did you tell the guy I told you so?
Yeah, you can't. That's kind of, you don't
gotta be
go
a
there.
nice guy, yeah.
Right. So I mean, it needless to say, I mean, I referred her to another loan officer who was able to do the underwriting. And the thing is, the issue at hand was that this was a condominium, so there was an association, and there was some pending litigation. However, that loan officer that me the that um, gave me the 6:40 a.m. phone call, had gotten some of the those documents from the association prior and had it in hand. So I'm not sure why this became an issue. But anyway, so the other my referral lender came in and they were very familiar with the complex and the association and the issues and the pending litigation had nothing to do with structure. It was I wouldn't say minor, but it had to do with I think it was HR issues with the association and an employee. So nothing really to do with the structure or the anything to do with that. So they were willing and able to fund and give my buyer a loan. And on top of that, even were able to do it in 30 days. So um, in this situation, it's a prime example of where lender selection is very important and shouldn't be taken lightly. Um, yeah, so that's my story. So I hope future buyers, you know, do their due diligence and select their lender um,
So if
wisely.
I if you're looking for a home for me, what would you do? Would we go to a broker?
It depends on single family also and what if you're looking at a condo or a townhouse or a single family home, it depends on that too. And I would definitely start reaching out to my contact to see, if there's any issues in these. Say it's a certain complex in town or something. I'd put out the feelers at that point, yeah, to make sure. Okay, have you guys landed in here recently? Okay, any issues? Okay, I have a client for you. Let's
Right.
let's do that.
And we're not
So
going to
I
give
would,
out any
I would
recommendations on this video for good lenders go bad too. So that's that we want to
yep,
kind of make this content evergreen. So
yep,
contact Dean in an email if you're a client of his, and figure out who are the good people to work with.
for sure. Thanks. Okay, and then this is me too, right? So one thing is when you're selling, it's all about timing, right? Besides location, location, location. So spring is the best time to sell, and I guess in the mainland, that's something kind of obvious. The snow is gone, it's starting to warm up, and um, that's one aspect of it. Another aspect is um, for families. Um, if we're listing in the April May timeframe and we're planning to close in 30 to 45 days, that's right into the summer, and that's when families with children who are in school, that's the perfect time to be transitioning to a new place. So that's another reason why spring is a great time to start listing or prepping and listing for your home. And I think some of these statistics here show different states. For example, all of them pretty much in the April May timeframe, and it shows we see
Like a
that
1% increase, yeah.
yeah. So I mean that it's reflected also in the price as well as days to close. Yeah.
Cool.
Yep.
All right. Again, my name is Lane Kawaoka, and I've got a free book for you guys this month. My one thing that changed everything. You guys can go and get a free copy of that if you text the word ebook to 587-317-6099. Again, text the word ebook to 587-317-6099. And today I'm going to talk about the recent developments that's been having outside of Hawaii and outside of America. Um, this happened in early March. I guess what happened was the Chinese created their own petrodollar. America kind of owns the world market in terms of, they own this thing called the petrodollar, where all the world's currency kind of flows to US dollars. And China's been kind of making a secondary market to kind of control all the the oil. So that's kind of been this trade war going back and forth. And of course, we all know Donald Trump's our president, love him or hate him. But he's created this tax on, against China, 25% tax on steel and 10% tax on aluminum. Of course, except our friends in Canada and Mexico are exempt for that. And he's kind of saying that, he's saying that there's a lot of Chinese knockoff, like electronics, clothing, etc. And that's kind of, what he's kind of saying is the stimulus behind that. But, something to be aware of. The world is changing, and, it's kind of changing. China's obviously becoming a more of a superpower. And there's a chart on the bottom. Last couple months have been pretty stable in terms of interest rates. And I wanted to introduce a couple topics here that a lot of economists use. First is called quantitative easing, which created $3.5 trillion from the 2009 to 2014. So what happened in 2008 when the markets kind of collapsed? The Federal Reserve Bank did this thing called quantitative easing, where they basically put a whole bunch of free cash. They created money out of nothing, and they put it into the markets, and that's kind of been the stimulus behind the stock market kind of being on a tear since 2009 up to now. There's a new term coming down the pipeline called quantitative tightening, which will drain that liquidity from the markets. Nobody really knows when, um, but my guess is it's going to take longer than what we really think. And you can see from this chart here, quantitative easing one, or QE1, happened in December 2008, and QE2 happened in 2010, and QE3 happened in 2012. And but the question is, well, when is the liquidity going to drain out of these markets? When is quantitative tightening happening? No launch date is set, but a lot of people think it's going to be late 2018. And why would the government want to drain the liquidity from the markets and possibly make the stock market go down? Well, the way I think about it is, if you're in a if the government needs levers to pull in case the economy kind of takes a slide backwards. So what they're doing is that they're kind of taking the money out that they put in as sort of the ability to pull some levers into the future. So another analogy people like to use is, always having enough dry powder around. Because once you lose all your dry powder, or in this other case, you pulled all your levers, you really don't have any way to, fight an economic downturn going backwards. So it's the government kind of doing, the responsible thing here and kind of draining the money from the economy slowly. Because at the end of the day, they're trying to just smooth out the ups and downs in the market.
Yeah. I know if they need to ever bail us out again, then they can go back to the QE, right?
Right, right. So people are kind of interested in Japan. This is kind of what Japan's been doing since, probably about 2008 too. They've been going through quantitative easing, and they're planning on doing it all the way through 2019. Probably going to go through the Olympics more than likely, because that's a big event for them. And yeah, and then we talked about selling our houses, and I would contact this guy, Dean.
Yes, yes. Yeah. So if any of you listeners, you folks are listening and you have any suggestions, of topics you want covered, or if you have any questions of anything that Lane and I covered, or just feel free to contact one of us, Lane at simplepassivecashflow.com, or email me at deanueda@gmail.com, or give me a call or text anytime.
Yeah, and please go and subscribe to our YouTube channel. You guys can Google Hawaii real estate news now. Right after this, we're going to be recording probably a 1 hour webinar on how to buy, all the steps to buy or purchase a home. So you guys can find that there also, or if you can't find it or you're just lazy, just contact Dean, at Gmail. And again, if you guys also want to join the new REI Aloha Passive Real Estate Investor Club, please text the word aloha to 314-665-1767. That's on the bottom of your screen there. Again, text aloha to 314-665-1767. And I guess we'll see you guys next month. Bye.
Bye.